My name is Professor Adam, and I'm going to teach you how to become a professional cryptocurrency investor. I've been active in finance for almost 9 years, and I've made millions of dollars without the need for one. I'm going to teach you everything that I have learned throughout my years of finance, all of the study, the research, the pain and suffering, so you too can learn from my experience and become elite. So what is cryptocurrency investing? It's buying digital assets and then getting paid massive amounts of money at a later date when you sell them because they have multiplied in value. You'll be taught multiple methods for how to do this, leveraging my years of deep research and world-class systems. When people invest by themselves with no mentorship, they usually get scammed quickly or lose all of their money because the market moves are too fast or confusing. But with my systematic investing, you develop high-quality criteria that tells you clearly what to do to make profit over the long run with far less risk. Most fake trading salesmen online seduce you with flashy Instagrams, and they teach the same ineffective shit between different accounts. This university and this campus specifically is different because I am an effective professional and I will guide you every step of the way. After going through the basics, my masterclass will teach you up to 5 uniquely profitable methods invented by me that will make you elite. So how much do you need to get started? Well, it's up to you. The more you have to start with, the more it's going to become once you multiply. If you look at the amount that you want to invest and you say to yourself, this is a huge amount of money, this is a good amount, and if I was to multiply it, it would meaningfully change my life, then cryptocurrency investing is for you. So if you're ready for the 100, 1,000, 10,000% gains, then get ready to go through the hundreds of lessons that we have in the campus to make you elite, and I'll be here to guide you every step of the way. GM, my friends, welcome to another episode of Investing Analysis with your man, Professor Adam. Hope you all are doing fantastic today and are ready for another episode. So if you're all caffeinated, let's get into it. Now, before we get into the analysis, obviously I need to do a disclaimer. We always have new students coming in here every single day. If this is your first investing analysis video, you must understand that this is the icing on the cake. These videos are not the cake themselves. If you do not do your lessons, if you do not go through all of the material that I've given to you, then these daily investing analysis videos and live streams will be of no use to you. There is no substitute for going through the courses. There is no substitute for getting your roles and your masterclass graduation out of the way. That is the minimum standard. It is not optional. And there is probably nothing in here that you will be able to see in a single or even a whole series of daily investing analysis videos that will allow you to have a system that will make you profitable over the long run unless you go through all of the material and develop your systems so you have a deep understanding of what's going on. There is no just watching me every day and being like, oh, well, it's good enough. I'll just show up for just these videos because then he'll give me a little bit of an idea of what's going on. He'll pull up the fucking chart and draw a squiggly line, and then that will tell me everything that I need to know. That's not how good investing works. It's not how I made my money. I didn't make my fucking money by drawing squiggly lines on charts, but I know you degenerate scum, that's what you think that good investing is. You all think exactly the same way, which is why you all have the exact same results and I don't. But it is what it is. You can either believe what I have to say or you cannot, for as much as I care, because I already made my money through systemization. You're just trying to learn from me. So without further ado, let's just get into the material, which is, of course, a complement to the systems that you should have already designed and built yourself. No, this does not mean that following the signals is a substitute for learning it yourself. That's not why you're here. Don't come to me with, oh, but I'm so smart and I can follow the signals and that's very efficient use of my time. No. Unless you are a fucking doctor or performing surgery on people and you're working at the hospital 23 hours a day, you can make your fucking systems. Believe me, you've got plenty of time. You're just not looking for it. No change to the TPI. Now, new lead-off morning note from 42 Macro. We'll go through this quickly, and then we'll go through some of all of the valuation stuff. We have a little bit of rhetoric coming from the Federal Reserve, mainly from Fed Chair Jerome Powell. Everybody listens to him and wants to know what he has to think. But at the end of the day, if you're following my economics masterclass framework, you will not believe anything that this motherfucker has to say. actions speak louder than words. So we'll read through this anyway, just to understand kind of what the public perception is, and then we can look at what our understanding of that perception is. And in case of, again, if this is your first fucking stream ever, liquidity is the primary and best driver of cryptocurrency. There is no second best driver. Fed Chair Jerome Powell appeared on 60 Minutes Sunday to reiterate that it was too soon for the Fed to begin cutting interest rates in March. Elsewhere, the first batch of composite PMI data from around the world was supportive of the green shoots globally theme. Now, while Jerome Powell can say things like, oh, well, I don't want to cut rates too soon because we want to see inflation coming back down to 2%, that is just talk, and we don't really listen to talk. I would rather look at data. And if the global economy is doing well, then that is likely to delay your rate cuts because the economy in that sense would be taking care of itself and would need less stimulus. But it still doesn't mean that any of the banking liquidity issues or any of the collateral issues just magically disappear. There are still trillions of dollars of unrealized losses floating out there in the financial system that the banks are white knuckling onto for holding on for dear life. So Powell also confirmed that the Fed is not going to factor in the election into the decision-making process, which means a delayed start to policy rate easing is unlikely to prevent them from making necessary adjustments to monetary policy. The institution's ability to block out political noise is critical because Fed policy is likely to be a hot-button issue on the campaign trail this spring, summer, and fall. Yes, and they're going to be looking at the interest rate, and this is, I gotta go onto the rant early on. They're going to hyper focused on interest rates. The interest rates are going to be what everybody's looking at. They're going to be like, oh, what's going on with the interest rates? And it will be like the red flag that you wave in front of the bull. And they're going to be flapping that flag, hoping that you pay attention to just that thing. And in the background, they will be doing all types of weird stimulus. They will be having Treasury General account going up and down, the reverse repo program going in and out, and emergency lending programs, increasing and decreasing their stimulus, and all this shit happening behind the scenes. And they're going to be changing the composition of bills to treasuries and all types of weird shit in the background to make sure that all of the financial economy is working as normal. But the fucking interest rates on the front end, we're so tough on and the balance sheet will be declining very, very slowly. And they'll be like, look how tough we are on monetary policy. We really want to get this inflation back down. Also remembering that the metric that they use to measure inflation, CPI, is one of the most heavily manipulated metrics that any first world economy has ever seen. It's basically Chinese levels of data manipulation. There is basically nothing in that fucking measurement that is reflective of what true CPI actually is, what the consumer actually wants. They'll put in 10 iPads into the CPI and they will take out milk and bread and be like, oh, well, let them eat iPads. And the price of iPads has been going down. And they'll remove fuel and they'll remove rent. And they'll be like, oh, well, we'll add the Dorito bags in and we'll add iPads. And that's CPI because that's what people want, right? They want Doritos and iPads. Fuck the milk and bread and fuel and housing. It's fucking criminal. Anyway. Elsewhere, the positive global liquidity impulse has been driven in part by animal spirits due to green shoots globally and China front-loading stimulus early in the calendar year. Today's improving global growth supports the legacy uptrend, and China is in a fucking dire straits right now with Evergrande collapsing. I think they're down negative 70% or negative 80% at time of recording. That is not good for China. And that is a disgrace on their behalf. Money printer go burr. Money printer is going to go burr. And you can't stop them. Nobody can stop them. Right. VAMs, I don't really see any reason to harp on these too much. It's transition to neutral, but often the phase transitions for these don't really work out the way you expect them to, which I guess is normal for a trend following indicator, but the trend following behavior of the VAMs is quite bad. I would just be looking at the ranges. I think the ranges are quite good. I don't think the trend implications are very good though. And there's really no signal there that I think is worth looking at. Right, moving on. Dispersion heading down. Investor positioning in stocks quite high. Goldilocks is still the dominant market regime. Now, we can see that liquidity is still going up, which is great to see. Always double check that. Fantastic. Even though these are a rudimentary measurement of global liquidity, it's still a more granular and a more granular way of looking at liquidity than capital wars, which I like. Okay, so we'll just recover the policy comments here. The Fed has implemented a dovish policy, dovish pivot with rate cuts likely over the near term. So that is going to be early 2024, early to mid 2024. We expect balance sheet roll-off to persist over the medium term, but it's unlikely to be significant in the context of everything else. We expect the Treasury to offset balance sheet roll-off via its low net bond supply financing regime to avoid causing market disruptions in a general election year. The unnecessary $500 billion in reverse repo and above target TGA balance represent coiled springs of US liquidity that may add to the global liquidity impulse. The positive global liquidity impulse is being driven in part by animal spirits due to green shoots globally and China front-loading stimulus earlier in the calendar year. And with each day that passes, we get closer and closer and closer to Lunar New Year, of which today, I don't know why I chose the 6th of February for this one, but we are now within that range of that fucking potential range. Fuck it, I'll move it out to tomorrow. We're now within that range of possible dates where we're going to start to see more and more and more stimulus. And I think that's appropriate too, because China is in fucking trouble right now. Their stock market is plummeting. So, a little more detail with the Fed Chair Jerome Powell's speech. The danger of moving too soon is that the job's not quite done, and that the really good readings we've had for the last 6 months somehow turn out not to be a true indicator of where inflation is heading. At least he's admitting there that it's not as accurate as he would like. We don't think that's the case, but the prudent thing to do is to wait. Just give it some time and let the data continue to confirm that inflation is moving down to 2% in a sustainable way. Powell also confirmed that the Fed is not going to factor in the election into the decision-making process. We never do, and we never will. Integrity is priceless, and at the end, that's all you have. We plan on keeping house. I can't help but laugh when I read this because I do not fucking believe it for a second. A very good selection of words, very encouraging, but it's a fucking lie because that's not what the incentives are really, and they can conceal it all. They can conceal it all behind the scenes, and they can talk about whether or not regional banks are going to implode and whether they need emergency stimulus to stop systemic crises. And that's a problem of their own making. They were the ones that did it in the first place by providing fucking zero interest rate and emergency loans to them all. Anyway, global liquidity impulse is positive, good to see. And they're just saying that all asset markets are correlated to liquidity, which is true. Now we will move on to the high time frame valuation section of the investing analysis. So CBBI, no change, and no change in those ones. These are very long-term, high time frame valuation metrics, of which none of them are firing off. Now this one here kind of, I don't know precisely when these metrics fire off. I think it's when the blue line and the orange lines both move above the red line together. Now, if you zoom in, you can actually see that the two of them are getting fucking super close to that line there. If I zoom that right in, look how close we got. So you could make the argument that it is the beginning of the end, but probably not. Remember, everything must be taken in the context of Bitcoin's primary driver, which is liquidity. If you fail to do this, then nothing will make sense. Always work from the highest thing and then work your way downwards. Key principle. Always start at the highest level form of analysis, the most fundamental, the most longest term driver, and then zoom in incrementally through your different drivers and systematic processes until you get to the point at which the randomness and the signal disappears. The randomness is too much and the signal disappears. And then you go one level further up and then you stick with that and then you act upon that signal, right? Sometimes you will have a lot of signal all the way through your process to the point where you can even take a fucking day trade as an investor, which is hyper rare. Hyper, super rare. Maybe 1 or 2 days a year, you may get such opportunities, but only if you're keeping a very close eye on your process. Most of the time, you're going to have too much noise in your very low time frame stuff, and you're going to need to stick to long to medium term type of stuff. And you will oscillate gently between those two, depending on the integrity of the data that you have available to you and the quality of it, the cadence of it, and all these different things. So let's have a look at some of the other indicators now. No signals, no sell signals from the short-term holder MVRV. As a matter of fact, it is quite low. And it's not quite as low as the one from CryptoQuant, but it's still looking good to me. A few sell signals, interestingly, on this one on the way up, which I thought was interesting. I didn't cover this yesterday, I don't believe, but those ones there were quite interesting because normally you don't receive those types of sell signals until you're getting quite overbought. To be fair, that one there, after you receive these ones, it consolidated for quite a while. So you could say the same thing will happen there, but probably not. I think that these here will just be part of the context of the next liquidity uptrend, kind of like, I don't know, this. And the cycle that we have here will look like a mini one of these leading up into the halving, which is like consistent overbought values just before the halving, and the halving will be a sell the news event. But we'll navigate that as we get closer to it. AVIV gradient weakening slightly. Now let's have a look at our CryptoQuant dashboard. My favorite short-term indicator for the moment, which is the realized short-term realized profit and loss margin. The moving average continues to decline at a nice fast rate down through here. Very happy to see that. Like I've mentioned previously, there is still quite a few days of consolidation that you could potentially see here before that breaks back out into a positive uptrend. And I'm okay with that. I'm patient to see that. But I wouldn't imagine it would take too much longer. It may even be quite a fast affair considering how soon Chinese liquidity may come into the market. So nothing useful here or here. I noticed that the volatility warning has now disappeared. Inter-exchange flow pulse continues to decline slightly, suggesting further consolidation. Maybe Chinese stimulus disappoints, and these metrics are kind of foreshadowing that this Chinese New Year isn't the impact that we're looking for. Maybe it just stops it from going down so much, and we have a time-based capitulation, and a kind of Chinese stimulus places a floor under the price for a little while, and then we get that negative profit and loss ratio represented by the yellow line before it continues upwards. That's a potential scenario. Good to see the ETF holdings continue to increase. It's fantastic to see. New money, no signal. MVRV, short term, no signal there. Still above the halfway mark, which is fantastic to see. I love that. Nothing new to see there. Oh, okay. NVT signal is starting to move up at a rapid pace, so that may be worth watching. May get an overbought one on that at some point. We'll keep an eye on that. Breadth has not changed. And as far as the Capriol macro indices go, Ethereum is almost down below. It is almost crossing zero, which is a little bit concerning. Capriel's BTC index is almost turning up, almost by the looks of it. Keep an eye on that one. No full cycle indications there. Any updates on Google Trends? Oh, down again. Good to see. I think it uploads 1 week of data at a time. Must be on a Tuesday. So you can see, I don't know if this is behind my camera, but I think last week it was about here somewhere. And now the last week of data has been uploaded. It's back down basically at all-time, all-time lows relative to the last several years. If I put a moving average on that and I go to like, what is it, 1 month? Yeah. Let's go through quarterly. All-time low, almost. When was the last time Google Trend information was down that low? It was like January, it was like December 2016. So you can see how little retail interest is in cryptocurrency right now as a proportion of global search interest. BTC sentiment screaming up while Ethereum sentiment is going down. Do people believe that this rally is going up already? Is that what people believe? Maybe we need one final nuke to clear everybody out and then send it up like that. I wonder if the liquidation maps would show that. Do we need one final nuke? I think the 30-day map from yesterday showed that, didn't it? It was heavily biased to the downside. I mean, it's quite thick. That's what she said. Yeah, no, still no real indications there, nothing that I would consider to be concerning. Yeah, no, nothing major there. I'm not going to put my balls on the line and make a call on this because none of these liquidation maps look really significant in any direction. Maybe that's tiny little bit bullish. That looks fairly bullish. What's happened with Solana? Is everybody shorting it now, expecting the next leg down? Okay. Yeah, it's bizarre. Extremely high sentiment, extremely high rate of change on Bitcoin sentiment in the last couple of days. That would almost certainly have me expecting something like that. Something to clear out the plebs before sending it. Right, moving on. That hasn't changed at all. Still how I expect it to be. Nothing crazy there. Oh, yes, and this tweet here I wanted to share with you guys. This is an interesting one. I found this fascinating. I find shit like this really, really fascinating. So this guy, periodic impulse halvings, he placed some sort of a model over the top of the power law adjusted Bitcoin prices to get the cycles, not only the cycle peak, but the cycle frequency as well. So along both axes, he's doing some sort of a frequency analysis that not only incorporates the peaks of these markets, but also their dates as well. So if you look at this, you can see how close the relationship is, and then it's actually made a projection out into the future. It appears as though this cycle is at about $200,000, because that is the incremental mark above 10 to the 5, and about the number of days from Genesis block. Shout out to the captains for helping me count this. Is about mid to late 2025. as this gentleman here also suspected. So it's good to see that the liquidity forecast for when the liquidity cycle should start to turn, which has been mentioned multiple times by Michael Howell, which is late 2025. That is also, it appears to be hidden within the fucking Bitcoin price. But if you think about this, and you know what I just realized? Of course they're the same date. And you know why? Because Bitcoin is a proxy for global liquidity. So, of course, if you extract long term cycles from Bitcoin, you're effectively going to be extracting the same cycle data from liquidity using two different metrics at the same time. They're just different ways of expressing it. You could make the argument that using Bitcoin data is a more accurate way of extracting liquidity cycle information than the liquidity cycle projection is, because the market theoretically is the best pricing mechanism. So hopefully you all understood that rant, because I think that's quite fascinating personally. The more I think about it, the more hilarious it gets. It's almost like Bitcoin predicts liquidity rather than liquidity predicts Bitcoin, but the two of them are basically the same thing. So I think that's amazing. But yeah, so you're going to see exactly the same forecasts if you have some sort of a cycle forecast. It's going to represent the exact same thing here that it would with global liquidity. And a different way that I thought about expressing it today was to extend the kind of analysis on this liquidity proxy, which has extremely high correlation to Bitcoin, and kind of use that. So I'll show you what I mean. I might just be talking shit. A picture is worth 1,000 words. So you may have heard me talk in the past about Fourier cycle extrapolations, which is probably the best way of getting cycle extrapolations from data. You can't do it with Bitcoin price because of the extreme log like increase in its price, but you can with things like this, which is the liquidity proxy. So if I go and I get the Fourier extrapolation of price, you can see that it's kind of fucked up at the moment because it's starting its forecast all the way back here. But what if we wanted to make a forecast and try to incorporate as much historical price information as possible? Now, I think people often use this indicator the wrong way. Not to talk myself up too much, but you have to understand that if you're going to use this indicator, that there is a limit to 500 calculation periods, 500 calculation bars, and you cannot exceed this. And it is a sum of the forecast bars and the calculation bars. So, for example, you can bring this up to 400, and the indicator will still draw. But if you bring that up to 401, the indicator will fail to draw. So you need to make sure the sum of your calculation bars and your forecast bars always equals or is less than 500. So what we want to do, bars back to start forecast, I always like to start it as close to current price as possible. And then you can see that we have plenty of price history to forecast over. So forecasting periods, we have 100 there. Now I might go okay for the moment. And first things first, actually, see if 2 weeks works. If I go 2 weeks, and if I go, for example, 50 bars back, you can see that to get to 2025 or to late 2025, I'm really pushing it here, and I don't entirely capture the entire price history. So that's with a 2-week chart, but I actually have to go to 3 weeks in order to capture all of the cycle data within that time series. And then what we're going to do is we're going to have a look. Yep, cool, fantastic. So that's doing a pretty decent job at the moment. It captures all of the historical information and gives us a projection out into the future. And lo and behold, it is mid-2025. But of course, you may say to yourself, well, I think that this projection can do slightly better. Maybe it's not estimating the cycles within this thing correctly. So you can actually change the harmonic period and go to a more coarse harmonic period like 10. Gives you a more rough outline of what that would look like. And wouldn't you know it, it tells you about October 2025, which is also kind of the approximately the date of what this one shows you. And you can see how now It's getting a better overall approximation of where these cycles are. Alternatively, you could go full schizo and you could maybe go an extremely fast harmonic period. See if that tells you anything about what you should be expecting for Bitcoin into the future. Don't know whether or not it would be necessarily useful. Maybe 30 would be a little more conservative and a little more useful. However, you can still see that it is about 2025, regardless of what you choose. And that looks a bit weird to me, so I might shorten that up a little bit. But anyway, this is an example of taking very long-term price history and performing a frequency cycle analysis on it. Again, I'll re-mention that you can't always use this same method on price series. If I put this over Bitcoin, it's not going to work correctly because the values down here are too small relative to the values up here, and the frequency calculation is going to get all fucked up. So that's not going to work correctly. But you could potentially use it with other, maybe more stationary time series or time series with less extreme values, if you can find them. I don't know what a good example would be. Maybe a ratio analysis would probably be appropriate for this. So like SolETH, or maybe not. Finding time series where you can perform this type of analysis, where it's not going to get blown out completely on crypto assets, would be quite difficult. Maybe like that. BTC Sopper. Yeah, that's probably not going to work. But it looks like it works kind of nicely on BTC ETH. But then again, also a warning, and I continually have to make this warning with this particular indicator. If you go to replay and you actually go back in time and observe how these forecast things work into the future, you will see that it doesn't work very well as a leading indicator. It's almost just a way of helping you understand how things work. I think it would work much better over very, very long periods than very, very short periods. So I would very much caution you against using this indicator for anything that's practical. It's more of a curiosity than anything else. But yeah, I think cycle extrapolations can be a very curious way of looking at the data. I just wanted to bring that to your attention. So anyway, what we'll do now is we'll move into the chat channels and let's see if you guys have any interesting questions for me. I'm happy to answer any and all reasonable questions. You'll walk with me a while, LVX. Good shit, man. Professor Adam, please relax me with some ASMR. If you've observed your portfolio value in the last 2 or 3 weeks, you're going to fail miserably. Make sure you never check your portfolio value. All right. Hopefully that has relaxed. Adam scolds you in ASMR. Okay. Is Mozillash for Switzerland a good EMS domain? Mate, fucked if I know. Committed liquidity facility? I'm going to save that one, man. That's hilarious. Right. Yep, good. Yep. Nice. Wow, that's cool. Most mainstreams are talking about sell the news event with the halving. Would this make sense? Make it less like, oh god, oh no, mainstream news is talking about it. You know what? They're probably, the mainstream news outlets. They're probably in this campus right now. It's probably the same with the fucking Capriol investing hedge fund analysts in here listening to my investing analysis every single day. I know you're in here. Everybody listens to me eventually. Zcash 1 week, 15x after halving. Yeah. Thank you for all the hard work you put in. Can you see layer 1s on ETH being relevant in this cycle? ETH is a layer 1. The fuck do you mean? Do you mean layer 2s? Anyway, I don't know what Monad is. Haven't heard of it. Sorry, my friend. GM. You mentioned yesterday you're biased towards ETH as opposed to BTC, but began to question whether or not you had been too biased towards ETH. Have you done any more research or thinking regards this topic? And if so, have you adjusted your outlook and why? Okay, so yeah, I did enter a period of time like a week ago where I was like, okay, maybe there's something wrong with me. You always question yourself a little bit when your investing thesis doesn't immediately play out. You're always a little bit paranoid. And so what I did is I went on a little bit of a searching kind of journey, and I was getting in contact or inquiring with a few other people in my network who are extremely wealthy and successful investors. And I was like, what is the composition of your portfolio looking like? What have you got? What have you got? And they're all like dudes that are independent of me, right? I only asked guys that were independent of me, that don't listen to my shit, or at least I don't think they do, to figure out whether or not I was too heavily biased against Bitcoin and towards ETH. And they all had like fucking no Bitcoin holdings, and like almost all of their net worth, or their net worth of those portfolios, was in Ethereum. And I was like, oh, okay. So I'm not as crazy as I think, being an ETH maxi. And to be fair, that's what you see with the fees as well. It's like, how do you see the value of a network? Well, people actually using their money to invest and to utilize that network. If Ethereum is generating like billions of dollars in fucking fees, and Bitcoin is a fraction of that, then where's the value? Like, obviously the value is where people are willing to spend the most money. Otherwise they wouldn't spend the money. There is some sort of an effect within people globally where they understand that Ethereum is the best. You can use layer 2s and it's not a problem, but of course, to bridge, often you need a custodian of some sort, and you need to trust the custodian. If you just move your shit onto Ethereum, you don't need to trust anybody to do anything. Yes, the fees are more expensive. Do the people that have massive amounts of money give a fuck about transaction fees? Think it's a problem for them if they need to pay $20 for a DEX transaction relative to like a $40 DEX transaction? Plebs would be losing their minds. But to the wealthy, it doesn't make a fucking lick of difference, right? And they'd be willing to spend hundreds of dollars per transaction as long as they get that security that they're after. They know they can get security. They know they can get compliance. They know how it works. It's proven. There's the reputation is unbreakable at this point. Yes, I do understand that they have had rollbacks in the past, and the Ethereum Foundation, and there's issues behind that, and everything's in Vitalik's hands, but not really. But still, I think Ethereum is the index fund of the cryptocurrency universe. It contains everything. It has all of the best financial systems on it. It's designed for big money. Your retail chains and your meme coins, they can pump, and that's cool, right? Go to a meme chain if you want to trade meme coins. Fucking snipe shit coins on Solana all day. That's what they're for. Shit coins are for generating people more money so that they can buy more Bitcoin, basically. But also beware that if you're generally buying these things after they've already been floated, the shitcoins that is, you're probably the exit liquidity for the people who created them. Never ever forget that. You're not smart if you're trading shitcoins unless you have some sort of insider information generally. It's the reason why modern portfolio theory and fucking long-term holdings is the main way to go. Hey, Prof, where in Canada do you live? I live in Vancouver. It's not for everybody. There are a lot of crackheads here in Vancouver, but it's nice and close to Whistler, so I can go and drive up there and go mountain biking and go snowboarding when the weather is right. Hey, Prof, are you familiar with bias markets? No. Made you become a teacher? I'm assuming you meant to say what? Well, it was the honor of working for Tate, and of course to get access to more people that I could discuss investing with. If you watch my Get to Know Adam podcast, you'll know all of that. Appreciate this information you provide. What percent of your net worth do you reasonably hold in crypto? It's 100%, mate. It's 100% of my net worth is in crypto. It has been for years. Can you elaborate on the GoDaddy ENS domain partnership? What's there to elaborate on, mate? GoDaddy is one of the most popular domain providers for the internet that exist. Everybody goes to GoDaddy to get their domains. And they recognize that when what the fuck is there to explain? ENS domains tell you where people's wallets are. GoDaddy tells you where people's websites are. Now, a lot of wealth, I don't know if you know this, but a lot of money is transacted on the internet. So if they can find a way of making ENS domains more accessible, readily accessible to people, and maybe even integrate those into their domains with like, because you know how you go onto a website and you click on the lock and it goes, connection secure, like what's the fucking certificate for this website, right? I am not a fucking tech expert, so I'm sure there are people that could explain this better than me, but what I do understand is that websites have verification certificates, right? What GoDaddy would probably do is they would take the URL and they would have maybe a verification certificate through their domain registration system that would have an ENS domain linked to that HTTPS domain, so that you know that if you were paying somebody using an Ethereum name or an Ethereum address or whatever, that was the actual Ethereum address that was related to that business or corporation that you were sending your money to. But even if that's not a real thing, it's just a way for them to bring the attention to more people about ENS domains. It increases visibility. I mean, there's so many different ways that this is beneficial to us. Professor Adam, what would be the best lessons to go over from the chart questions on time coherence, mean reversion, and trend following? Fucking price analysis principles. If you understand the fundamental behaviors of mean reverting and trend following indicators and what they're meant to capture, if you truly understand that, then it should be easy to identify mean reverting and trend following indicators. As far as time coherence, the medium-term manual aggregation mastery lesson covers it sufficiently. I think it's a very fast explanation, but I think it's a sufficient explanation. Just rewatch it multiple times. Never forget that a chart time resolution means fucking absolutely nothing. You mean feelings over systems? Yes. Prof, do you know the correlation weight between the stock MSTR and BDC? Not off the top of my head. Do you have a secret meetings with the IMC grads? Maybe you use that to cut out those mainstream news in our channel? No, I don't. What do you think about Arbitrum as a layer 2? Can you do your magic on it? I don't know what magic you're talking about. Arbitrum is a layer 2 that has low fees and it's based upon Ethereum rollups. That's what I think about it. GM, I currently have almost all of my cash in crypto. I'm 19 years old, and still that's why I don't have that much capital. Should I consider opening a long leverage ETH to compensate? If so, how much of my capital? Thanks a lot. Mate, I'm not your personal financial advisor, and I can't tell you fucking what to do. Listen, in my personal opinion, and this is my opinion, there is only really one way of addressing a portfolio. I can't. It's very difficult for me to recommend that people take on more risk, even if they have less capital, because the market doesn't care. I understand the approach. Don't ever think that I'm stupid and that I don't understand the rationale behind it. Yes, you say, oh, well, I don't have much money and I'm young and I can take on more risk than other people. Yes, that's true. But I don't think that the difference is at all as wide as you think that it is. Right? There is the optimal portfolio. There is the correct portfolio that you should be putting on, which is something that is a barbell risk parity weighted in essence. And the movement of highly risky to highly safe is only really a gentle adjustment in terms of your age, right? If you're fucking 19, the 10% risky part of your portfolio should maybe be like fucking 15 or 20%, right? Not 50%, not 80%, like maybe 20%, right? And if you're very old, then maybe the risky part of your portfolio is closer to like 5%, not 0. It should be a gentle move backwards and forwards. So when you guys come to me and you're like, oh, well, should I just not hold Bitcoin and Ethereum? I'm like, well, that's just fucking dumb because all of the stuff is weighted proportionally per its volatility risk and the probability of its success as well. Because there's a lot of things. If you go into the fully docked signals and for those who have access to it and you look at the full portfolio, my personal portfolio that I run, and the bottom like 15 to 20% of the portfolio is full of like insane shit. That's all, like each individual holding is only small weights, like only very small weights, like 1 to 1.5, maybe a couple of percent each. And those weights are representative of my belief on the probability of success of those tokens and as a function of their volatility as well. So if you're only filling your portfolio with shit that I consider to be a low probability bet, then what was the point of taking on all that risk in the first place if you're really just exposing yourself to garbage bets? So to just say levered long ETH to compensate, I don't think is a reasonable course of action. And I know you'll do whatever you want to do anyway, and you just need to temper your expectations. Time to do some reading on my 18-hour flight. Good, man. Going on through the coding course, and to be honest, it's not as entertaining as your courses. Hard to stick to it. No shit. Yeah, I believe it. High speculation, but my guess is the market cycle peak will be both AAA games starting to use crypto tokens and real estate getting tokenized. Real estate was getting tokenized last cycle, mate, and games, some big games were starting to incorporate NFTs, very little bits. So you're going to need to think way outside the box on the next one, mate. Remember, like I've said previously, whatever you think is reasonable to detect a cycle peak in a qualitative manner, it's not going to be like that anymore. It's going to be something way more retarded, something that you can't even think of. Remember, I said that somebody will be planting a fucking Doge flag on the moon. Elon Musk will send a fucking rocket into space and there'll be a Doge flag on the side of the Starship. Like the entire side of the Starship will be a Doge mural. That's the type of shit that we see at the market cycle peak. Like literally, he will meme the rocket into existence because that is the meme, right? Who better to do it than Elon Musk? Do you know who Peter Lynch? Yes. No. You tagged the wrong professor, dumbass. Doesn't it inflate BTC in some way? Yeah. Only if there's derivative markets built on top of it. Of which it's inevitable, right? But yeah, in some ways it does inflate the BTC price, yes. But no, if this is a misunderstanding of the mechanics of it. I'm saying yes, but not in the way that you expect. You say, meaning the people own the ETF instead of the actual coin. Bro, they have a legal imperative that they cannot break, that they have to buy Bitcoin for inflows. So if you buy the ETF, they have to buy the spot token that backs that ETF in order to make sure it's fully at its asset value, or else its value will diverge from the underlying asset. So your understanding of it is incorrect. The more correct version of understanding it would be to, okay, well, the ETF is now created, and what derivative products and option products do we have that are going to be built on top of that? That is where the supply inflation comes from. So instead of people buying BTC, they'll buy a derivative instead. Adam, that left bicep is looking crazy today. Thanks, bro. I'll have to start taking some more creatine, boost those muscles up. Do you consider upcoming token up? No. Yeah, no, I just follow the signals. Deep breaths and patience. As a tech guy, Adam explained the ENS GoDaddy DNS partnership fairly accurately. Okay, thank you. It's just something that I created on the spot. I didn't even think of it in advance. I just it just seems logical to me. Crypto prof that mountain bikes. Yeah, bro, mate, downhill mountain biking is fucking terrifying. Way more scary than bungee jumping. Way more scary than backcountry snowboarding, in my opinion. Like, fucking downhill mountain bike riding is fucking scary. Big respect to anybody that does it professionally. How's your gym process coming along? Okay, good. I didn't feel as strong in my last chest session, but my leg strength is going up like crazy fast. Just very, very exciting. Very cool to see that. GM Prof, with the expected levels of liquidity, what do you personally think of BTC price? Man, bro, I just covered that earlier in the stream with regards to the fucking power law cycle model. You fucking dunce. Have you not been paying attention? Maybe you joined the stream late. Maybe I shouldn't be so critical. What's the most efficient way of studying these lessons? The 4 principles of adult education in the daily lessons archive covers this. So this is remember guys, the most important meta skill you can learn is how to learn. I think that the daily lessons archive is currently broken. So, but yeah, I do outline 4 principles of adult learning. That is my personal method for how to learn things. That's how I learn. Everything that I've learned is through this exact process. It works off a few different levels. It is understand the link between what you're trying to learn and your expected outcome. If you don't know the link between these two things, then all hope is lost. Number 2, unlock the authority bias. Understand that whoever you're learning from or the material that you are learning from, it has authority over you. So wherever the information is coming from, it is your superior. If you need to find out why that is, if you need to look up a person's credentials, if you need to look up the material's credentials, if you need to fault find it for yourself, whatever you need to do, you must respect the authority of the material that you're learning from. Number 3 is repetition. Repetition. Number 3 is probably number 1 and 3 are probably the most important steps. Fucking repetition is so important. It is how I learned most of what I learned. Really, just repeating things over and over and over again forever. And number 4 is retrievability, which is really just by teaching. So you teach to somebody else. Teach somebody else what you've learned, or try and teach somebody else what you've learned. As you're describing what you've learned, you will be in real time identifying your blind spots, and you will realize you're not as smart as you thought you were. And then you will go back and point number 4 will inform point number 3 and form this beautiful cycle of consistently strengthening knowledge, right? Until you have no blind spots left. At what point you should have a very comprehensive knowledge of your subject matter. November 3rd, 2025, 4th halving peak approx. Okay, cool, nice. Personal opinion. I thought you were taking that power law cycle thing. Yeah. GM, thanks a lot, Prof. I'm currently fully allocated based on the SDCA, not a shitcoin in sight. My leverage 15% of my holding after all. Again, thanks, G. Yeah, if it's coherent with the structure of the portfolio, then that's fine. I don't know what the composition of your portfolio looks like, but if it is coherent with that, then that's okay. Let's have a look at it. Does 15% make sense? So here's one way of looking at it. Potentially, you could, I don't think that's accurate anymore. I think it's 100% allocated. Might need to update that. But yeah, for example, if you didn't feel comfortable with ENS domain exposure, and if you want to know how I specifically get my ENS domain exposure, you can get that through the fully docked signals, which is only available to post grad level 4. So don't fucking ask me for how I do it. Just pass the masterclass like you should. I mean, it's not really that big of a stretch to get your level 4. I mean, it should be very fucking easy for everybody because that's why you came here in the first place. But I digress. If you didn't want to do ENS domain exposure and you weren't comfortable with that, then you could potentially just use this in here. and just put your ENS domain exposure into your leveraged exposures through however you intend on using that. That's up to you. Your preferred type of exposure is completely your choice, but you may choose to not have something like this in here because really, remember that the ENS domain exposure is just an ultra high beta exposure bet on Ethereum. And so is leveraged ETH, by definition, a higher beta exposure to ETH. Since you talked about ETH up yesterday, is there any potential consideration in updating the SDCA for a temporary rebalance from leveraged ETH in the near future? Yeah, bro, but that's more in the context of full cycle valuation. When we start to see very high cycle values and we are consistently rising through high cycle values, those are the moments where you incrementally rotate into lower beta exposures to take advantage of your leveraged gains, really. But that's not a point that we're at yet. Wish I had all the lessons on my video so I can watch them while driving. Yeah. Who was Professor Adam's Professor Adam? No one! I didn't have anyone! I had to learn all this shit the hard way. It's the reason why that's the reason why I am like I am. Right. Have you ever met anybody or seen anyone else anywhere on the internet that is even remotely like me? No. You could maybe even say that it's a mental illness. I prefer to call it mental brilliance because I gave a fuck enough about this activity so that I would commit fully to understanding these things. And the curiosity, I let it overwhelm me so that I was driven naturally to understand all of my blind spots and to uncover all of the secrets for the market. I had nobody. And I don't think that if you relied on any one single person, you could truly reach your full potential either. Many of the investing masters in this campus, they don't wait for me to spoon feed them results or ideas. They go off on their own and they let their curiosity overwhelm them as well. There are many masters in here who have reached levels of sophistication that baffle me completely. Celestial Eye is a great example of this. And we're actually in the middle of a conversation, as you can see on my platform right now. But no, I didn't have anybody. I had, I learned from people sparsely here and there and a little bit around, but I was like a vulture on the internet, man. I had to scrape together little bits and pieces from everywhere and aggregate them myself, just like aggregate valuation analysis. I did the same thing with my brain and my understanding of cryptocurrency that I did with my systems. I just gathered, I just collected and collected and collected. You could call me a hoarder. Maybe I've got a collection like a fetish or something. I'm collecting all this information. And eventually you reach a point where you have so much information where you're like, okay, well now what do I do with it? And then you're faced with the grim reality that you actually have to do something with it. And that's where systemization was born. I was like, well, I have to find a way of utilizing all this information. Otherwise it's just going to be useless to me or inaccessible. No, I didn't learn from anyone. Fuck them. Although I have to say that, no, I have to give credit to Anton Creel. He was the one that, Anton Creel and my exposure to him was what pivoted me from retail to professional. Because then the concept or the idea, the seed was planted in my brain of moving from whatever retail trading is and whatever pleb regular citizen trading is to what a person would do in a bank or a hedge fund. That pivot is the beginning of your life, really. If you can reach that point, and I know because of the fucking altcoin hunt stream yesterday that 90% or more of people have not yet had that pivot, right? Because of how many people were asking me questions in the channel. Bro, when I finished that stream yesterday and I scrolled through that chat channel, there was so many people asking for tokens, and I was scrolling and scrolling and scrolling. I've never seen that many people posting before during one of my streams. It's fucking disgraceful. That is retail mindset in a nutshell. It's not professional. It's not a professional approach. look through these fucking channels and there's so many people without their investing masterclass badge. And even then, I consider that to be the very beginning. Whatever. What do you think the future of crypto will be used as a utility? Fuck. I mean, I don't care, man. I'm in it to make money. I'm not in it for the tech. Prof, just wanted to mention that the expo you brought up yesterday regarding liquidity cycles and Bitcoin value was quite interesting and have been running through my mind fairly frequently. Appreciate you showing it to us. No worries. Thoughts on why? Yeah, because the fucking Pepe shids himself regularly. Can you do a ratio analysis? No. No, it's for yesterday, mate. You can fuck off. Prof, how to deal with laziness and emptiness. They're not even the same thing. Emptiness, mate, I don't know. I'm the wrong person to ask, mate, to fucking, because I've got issues of my own that I'm working through. Laziness, fuck yeah, I know how to deal with that, mate. You want to know how to deal with laziness? Be ashamed and be afraid of letting down all the people in your life. And be afraid of being nobody. Let the fear of failure compel you forwards. All right. That is the stick. The stick is the biggest carrot of them all, bro. You are way too comfortable in your personal life. If you have the luxury of being lazy, man, you must really love your life. You must look around you in your fucking pod and look at your fucking Soylent and think to yourself, man, life is great. Man, you can stay poor for all I care. That's what Tristan Tate told us. I'm just repeating to you what Tristan Tate had already said. There's videos out there of him saying the exact same thing. And you know what? It's true too. Have fun staying poor. The sticks and the carrots are self-evident. You want to let down all the people that have put their energy into you. Think of the people that raised you and all the effort that they put in. Think of all the people from your past that are wishing for your downfall, or they think that they're better than you, all the people that underestimated you. And then think of all the great stuff that you can get. Think of how relieving it feels to have money in the bank. That relaxation can only come from security, real security. The feeling of satisfaction to go to a restaurant and order whatever you want on the menu, fulfill your dreams and have that fucking set of spare ribs, drizzled in barbecue sauce with all the sides, drizzled with barbecue sauce, and the fucking cars, man. Put that poster of the Porsche 911 GT3 on your wall and think about how nice it would be to own that car. Bro, fuck your laziness, mate. Will I get the Neuralink chip? No, probably not, man. What's the most amount of people you've ever had in a live stream? I think it was 1,600. Fuck, I don't know, man. Don't care. That was for yesterday's stream. Will the companies that want to buy our ENS names be able to find us easily, or should we put them up for sale on OpenSea? Mate, they can't buy them from you if they're not listed for sale. That's the point. They can't reach into your wallet and take it for themselves. The fuck type of logic is that? How the fuck do you people live your life? Like, honestly, how the fuck do you live your life? Who was the first captain of this campus? I believe it was Don Nico. I believe Don Nico was the first captain ever. Back then, they were called apprentices. Fun fact, he was the only, to my knowledge, to this day, still the only captain or apprentice to ever produce a piece of educational material that I incorporated into my courses. Do you think the ARB unlocked? I don't care. I don't have ARB. Should I buy, sell? Is that going up? Can we see your ducks? Yeah, that's top secret alpha. Yeah. Yes, true. Make sure you're doing the pelvic projection. Fuck XRP. Looks windy outside. Any tips on balancing work life, especially for those who are living alone? I'm the wrong person to ask, Matt. Wrong person to ask, bro. Working through that myself. Is there something we can read from the person you mentioned inspired you and there was a pivot between retail and pro? Just listen to me, cunt. Think. Like, do you... You know what? This is my fault. I should have made a lesson on it. This is my fault. All right, can somebody please remind me to make a lesson on the difference between fucking peasants and professional investors? What about holding ENS instead of ENS? No, to my understanding, there is no advantage to holding the ENS token. From my understanding, I don't believe there's any incentive to hold the token. Yeah, he is a G, not quite a top G. I don't think I would ever describe Anton Creel as a top G. Hopefully he never hears me say that in a recording because I have a huge amount of respect for him. You know, and he was nice enough to me when I met him, but yeah, I wouldn't. He's not probably somebody you would want to model your whole life off. That's Andrew Tate. And that's the reason why I am here talking to you inevitably, is because I identified and could recognize that the top G himself, there is only one top G. There is no fucking other top Gs. There is only Andrew Tate. He is the alpha and omega of genus. There is no second best. Well, there is a second best. It's Tristan Tate. Yeah. But anyway. Cool. So that's enough. I've had enough. All right. So we're going to end the stream here. Thank you very much for taking time out of your day to listen to me. Make sure you get all of your lessons done. There is no substitute for getting your lessons done. You need to get through them all so that you can understand what the fuck we're talking about and where all of my ranting and raving sits within the context of your portfolio and what you should expect from the market. So I will see you all tomorrow for another episode of Investing Analysis. See you then.